Hey guys, welcome to Traders Academy. Today we're going to discuss a little bit about options and how to choose, the right call or put or whatever. How to choose the right strike and all. To choose the right options contract because there's so many in the options chain, and so you want to choose the correct one, of course. Let me say that we're not at Traders Academy we're not financial advisors, and this information is just for informational purposes and educational purposes. You should always consult with your financial advisor and do your own due diligence. With that said, let's get started. Right here we're looking at GM, General Motors, ticker symbol GM. And stock is trading at $52.95 currently. So let's just say that we wanted to take a call on this. I am bullish on GM. I do believe that it will go higher. It's having a bad day today because the overall markets are pulling back today. But you can see it's kind of not the best, setup there, but let me see if I can. Yeah, it's not really a. It's more like a little wedge there, if you will, that it's putting in. You could also consider this. Let's see. Let's put a line there and a line there. You could also consider this a rectangle setup there. A little rectangle right here. You got your support line right there and your resistance line right there. If we break out of this resistance line, I expect the stock to go higher. I do believe it will eventually do that. We could get another test of this 50-day though. So again, if you want to take a swing on a swing trade on this, you want to get a good expiration on it, a good give you enough time on this. So let's look at the options chain. Right now it's March 5th. The expiration is on March 5th, $53 strike. So let's look at the options chain and see what it looks like. So I'm going to choose all expirations. So so we're looking at March 5th. So of course that's 3 days away. So we're not going to do that because we don't want to take a swing with 3 days out, because it's the delta is high, but the theta will eat you up. Greeks will eat you up. So time decay will get you. So we want to go 17 days would be it would be okay, but ideally I would go with 45 days away. So April 16 calls. So now we know what expiration. We want to go April 16 because we want to have plenty of time on this. Now, you still have a list here of strikes. So which strike do you choose? Well, the way I do it is I look for strikes with a high interest, high open interest, and good amount of volume on it. So when we look at this options chain right here, you can see the open interest, and you come down. And the two with the highest open interest are the $55 call and the $60 call. $60 call having the highest open interest. We look at the volume profile on these calls. There's the volume. And again, the $60 call has the highest open interest. So if I was going to take this call, I would take the $60 call, April 16. And for the premium would cost me $1.20. This is the ask, this is the midpoint, and this is the bid. So we got three prices there. You got the bid and the ask and the midpoint. When you're buying, and if you have time to, instead of just market ordering into the option, you can do a limit order. And now, right here, the midpoint and ask are the same, 120. But sometimes, especially if it's got a big spread on there, sometimes the midpoint will be lower. for example, on this $55 call, the midpoint is 257, the ask is 259, and the bid is 256. So you could put a limit order for 257, and you may get filled for 257. You don't have to pay the ask. You might can even, well, that's not moved up to 259, but yeah, so it's the midpoint is at 259 now. You could probably throw a limit order in there for 258 and might get it for 258 instead of paying the $2.61 cents on that. So always look at that when you're looking at a call option. But yeah, so let's select the $60 call, and then I'll go back to regional quotes on there on SSE. Minimize this window again. So yeah, now we got the $60 call, April 16 expiration, and it's trading at $1.22. So and I got my news tab right here. So that's how you select an option. You go and look for the high open interest and good volume on it. Now, with that said, if I was doing a day trade, open interest is a number from the day before. So, say a stock had I don't know, some kind of catalyst, and it was gapping up. So maybe you had earnings or whatever, and the stock was pushing up. So the day prior, on a certain strike, there might have not been any open interest on it. So open interest may show as 0, but the volume, if you got heavy volume coming into it, then I would still consider that, taking that for a day trade. And usually for a day trade, I would take closer expiration, like maybe the 305, maybe even the 319, for a day trade. Because, you say, well, why would you do that? Well, because I'm not planning on holding that. Win or lose, I'm not planning on holding it. I'm planning on exiting that position, no matter what. So at the end of before the end of the day. So, but if you're swinging it, you want as much time, in your favor as you possibly can get. So, yeah, I think this GM, has potential to move up higher. I mean, it's pulling back, but it's pulling back on lower volume. Man, I'm even tempted to take that. Let's see. Holding support there at the $53 level. Look at the 15-minute. Oh man, yeah, that's tempting. It's holding good support there, This was prior resistance right here. Resistance. We had a little bit of support there. Then we had resistance once we got below it, and resistance again. See, you had resistance, resistance, resistance. Now it's trying to act as support. Man, if the markets weren't selling off, so bad, I mean, it's been, it's been hard to take swings on anything because, with the market selling off like that, you usually, we could have another pullback if the markets pull down tomorrow again. We could have another pullback and come and test this 50-day, at which point it's, it would eat up my options contract. Of course, it's got plenty of time on it, but let me look at the SPY real quick. Yeah, see, I think the SPY is going to come. I think the SPY is going to come and test that 50-day at 380. I think we have one more red day tomorrow on the SPY. And I'm going to wait one more day before I take that GM. But yeah, that's how you choose an options contract. You know, I'm trying to think of another ticker. Let me see what's moving today really good on the options. Lyft. So let's look at Lyft. Okay, so I was actually wanting to take this earlier. It's holding support there. 38.2 holding there. And take these fibs off. Look at the 15-minute. That's our initial morning high right there. Kind of putting a triangle there, you know, above that initial morning high. Daily chart. Oh man, this is a similar example to what we was just looking at on GM. See how it broke out of this resistance level? Oh man, this looks good. Look at Uber. Uber had a real similar chart on the intraday, not on the daily, but on the intraday. I was looking at both, trying to. Yeah, they have similar charts. Uber's kind of a little weaker now, but 15-minute, 3-minute. Okay, yeah, go with Lyft. If I take anything, it'll be Lyft. And I don't like that. See, this maybe I think the SPY's probably pulling back. Yeah, see, SPY selling off. Yeah, so that'll mess up my. I don't want. Yeah, I want to take this, but you know, with the SPY doing what it's doing, I don't. You know, I'll probably just wait till tomorrow and try to get in sometime in the morning and day trade it. Don't really want to hold it. Ah, man, it's it's calling. But anyway, let's look at the options chain really quick. So it's right now it's trading at 61.89. I believe the you know it's at the 52. Let's see, the all-time high is 75. Okay. 52-week high 59.82. So it's above the 52-week high. Oh man, let's see. Let's look at the options chain here. Extend that. All expirations. And again, we don't, you know, if I was going to day trade it, I wouldn't mind going March 5th. Of course, late in the day, I'm not going to day trade it. Let's see. We want to look at least March 19th. I'm going to swing into tomorrow. Open interest, $50 call, huge open interest there. I don't want to pay that much for one though. Okay, this looks good. $55 call, low volume on it. $60 call, good open interest, good volume. Let's see, Delta 62. Yeah, that's not bad. So if I was going to take a swing on this March 19 expiration, I would take either the $60 call or a more aggressive call, maybe the $62 call. No, not the 62 because it's got low volume on it. No, the $60 call, low open interest. $60 call has good open interest on it. Or a more aggressive one would be the $65 call. Good open interest and good volume. But I don't know. Yeah, we should be able to make a move to $65. I mean, that's only a $4 move, $3 move actually from here. Let's see, 65, and it's trading at 193. The bid is at 185. Okay, that's not too bad. Let me look at the April 16 calls. April 16, good open interest right here. Highest, this one, and well, this one has the highest open interest but low volume on it. So this one and this one, the $60 call, and again the $60 and the $65 call had the best open interest and volume on them. So this would be a better call to take for a swing. Delta's at 44, theta's at 5. Okay, so $65 call. Okay, let me look at this one again. $65 call. So yeah, you could do either the $65 call March 19 or the $65 call April 16. April 16. The $65 call April 16 would cost you $3.70. So each call would cost you $370. The March 19 $65 call would cost you $1.92. So it would cost you $192 per call. Mark's closing 5 minutes. Again, this is a more aggressive trade. $60 call would be a better one because it's already in the money. But let me see what. No earnings. Okay. Look at the SPY. Man, the SPY is just so weak. I mean, I really like this. I like the setup, and I like, I would like to take that call, but I think I'm gonna pass because, I mean, with the market being so weak, lift has to be really strong to hold up again tomorrow. I mean, it's strong today, but yeah. So let's just let's just end the video there. I hope this shows you a little bit of how to choose the a proper strike, and how to look at the options chain. If you like this video, give us a like on our YouTube channel. Share it with your friends. Join our Facebook group at Traders Academy, and comment if you have any anything you'd like to see or suggestions. Just leave it in the comments, and we'll try to address it, and join our team.